If you are somebody who is tired of spending your entire monthly budget on your mortgage and you're tired of being slave to the lender, listen up, because I've got 3 ways that you can save money on your mortgage every single month that you probably didn't know about, and it could save you hundreds, if not thousands of dollars per year. So let's dive in. If you've never been to our channel before, thank you for visiting. My wife and I sell real estate all across the Emerald Coast, so please like and subscribe if this is info that is important to you. So what makes up a mortgage payment? We have 4 components: principal, interest, taxes, and insurance. Makes up PITI. That is the 4 components of your mortgage, okay? The first one is principal. We can only affect the principal if we put more money into the house, okay? The principal is the balance that you owe on your mortgage, what's left of it to still be paid off. We can only change that if we put more money into it, so let's skip over that one, okay? We're gonna also skip over interest, and we're gonna move into taxes. If you are somebody that owns your property as a primary resident, which means you live in the house that you own, you need to file for a homestead exemption. If you've never filed for a homestead exemption or heard of it, you're probably losing hundreds, if not thousands of dollars per year. If you own your property, you file for it. From January 1st to March 1st, you can go into your property tax assessor's office in your county and you can file for a homestead exemption. Now in Bay County, Florida, we can also do it online, so check your local resources. You might be able to do this online as well. You go online or in person, January 1st through March 1st, you file for this exemption and they will cut off a certain amount off of your taxable value. Who can file for a homestead exemption? Anyone that is a legal US citizen, anyone that owns and lives in their property. You must have, in the state of Florida, you must have a Florida driver's license or identification card. So if you just moved here, go ahead and get your driver's license updated first, or get an ID card, and then you can file for that homestead exemption as well. Now, the homestead exemption is not the only tax exemption. So if you're someone who may fall into any other category, like a disabled category, veterans, disabled veterans, surviving spouses of veterans or first responders, or all sorts of other different exemptions, research your property tax assessor's website and you might qualify for even further exemptions depending on your state and county and your personal situation. So take a look at that tax assessor's website for your county to find out more. Okay, our second category is going to be insurance. So obviously here in Florida, we are very familiar with homeowners insurance and how expensive it can be. So here are 3 tips that you can use to cut down on your homeowners insurance. Number 1 is going to be asking for a discount from your current carrier, okay? It may sound counterintuitive. Why would they give me a discount if they're already charging me what they're charging me? Well, these insurance companies are banking on the fact that you are not going to shop around, you are not going to sit on the phone to wait for a representative to get a discount, and therefore they're going to keep your rate where it is or do the increases accordingly. We also have an issue where people have this very severe loyalty to their insurance companies and they refuse to shop around. So ask for that discount, because homeowners on average in 2023 that asked for a discount saved somewhere around $472 annually on their insurance just by asking. Now, number 2, if they say no, then guess what? I'm taking my business elsewhere. You can shop around with other insurance carriers to see if somebody else will give you a better deal. That's where that loyalty comes into play. So many people are stuck with their insurance companies for life, and they could be saving on average $474 per year by shopping around and finding a different carrier that will give you a better deal. Now, you need to make sure that the coverage you have is the same, because I've had insurance policies before where they were significantly cheaper, but the coverage was inadequate. So make sure that you have adequate coverage for your home if you're shopping around and getting a newer, cheaper policy. The third option is you can identify what type of home you have and what kind of discounts you may be available for. If you didn't know, certain upgrades to your home can account for certain discounts from your insurance, like efficiency, stuff like that. If you have storm rated glass, windows and doors, that's one of the discounted options. If you have, here in Florida, if you have hurricane clips versus older types of hurricane protection for your roof and stuff like that, those can result in big discounts. So ask your insurance carrier, what can I do to my home to upgrade it for better efficiency, lower cost of utilities and stuff like that, but also give me a discount on my insurance. Okay, our third and final category is going to be the interest rate. All right, nobody wants to talk about interest rates. It's been the talk of the town for years and everybody hates them, but let's dive into how you could save some money on that interest rate today. It may or may not work for you, but let's see. So if you have an existing mortgage, you could do what's called a refinance, okay, if you're not familiar with it. So a refinance is gonna cost you money, so understand that. It is a new loan, it's gonna cost you closing costs. So make sure before you do the refinance, you do some calculations and make sure that whatever the refinance costs you and the money that you're saving per month, how long that's gonna take, and you need to be living in the house for at least that exact amount of time for it to be worth it. So for example, if a refinance is gonna cost you $5,000 and it's gonna save you $250 per month, that means it's gonna take you 20 months to make up for your $5,000 that you spent, okay? After you've been in the house for 20 months with your new rate, then you're making money every month. So I hit month 20, now I'm pocketing $250 per month that I wasn't before. But you gotta remember there's a cost to do that. So make sure that it makes sense. Make sure you'll be in the house long enough to realize that benefit. Now, if we're not looking at a refinance, we could be looking at a rate buy down, okay? So if you're buying a new property, you could be exploring the option of a rate buy down to help you save some money on your interest rate, okay? So what is a rate buy down? Basically, you get an interest rate, let's say for example, it's 7%. And then let's say you get a rate buy down, a 24-month or 2-year rate buy down that puts you at a 5%, okay? That does not mean that your interest rate is 5%, okay? Your interest rate is still 7%, but say that that buy down costs $15,000. I'm just making numbers up. That $15,000 goes into a pot of money called an escrow, okay? Every month, say that that difference in 5% and 7% is $500 a month. Every month, $500 is going to be taken out of that $15,000 and applied to your mortgage payment. So essentially you're saving $500 per month. But after 2 years, if that's the setup, and that $15,000 is gone, you're now back at a 7% interest rate. Your mortgage now costs $500 more per month, okay? So if you can refinance again after the 24 months and bring it down, great. But just know your interest rate is still 7%. You're just taking some money from a pot and paying for it. So if you pay for the buy down, you're still paying that same difference. You just put the money into a savings account and you're buying it down yourself. But if you can get somebody like a builder or a seller to pay for your rate buy down, then that means you could be saving $500 a month for 24 months or whatever over the life of your mortgage, and it could save you a bunch of money. But just understand your interest rate's still the same. It doesn't change, but that's the rate buy down. Don't forget to like and subscribe if you found this information helpful. Hopefully this is something that will help you save hundreds, if not thousands of dollars per year on your mortgage, and you can take this into the future every time you buy a house from here on out, and this will save you a ton of money. So if you like this, let us know. Let me know in the comments, did you know about a homestead exemption? Have you ever done a rate buy down? Have you ever done a refinance? What worked for you, didn't work for you? Did you shop for your insurance and save money? Whatever it was, let us know. Let's get a discussion going. I would love to help. If you have any questions at all, please reach out or ask in the comments. Here's my information below if you want to reach out directly to me. We love to help in any way that we can, even if it's not home buying or selling, it's some sort of help with mortgage, insurance, whatever. I'll hook you up with anybody. I'll help you out in any way I can. I appreciate your time. Thanks for checking us out. We'll see you later.